All right, what's up, what's happening, and welcome back to Gentlemen's Council as we continue our series on building generational wealth. And today we're going to be discussing stock markets and why it's one of the best kept secrets to building wealth. Good evening, David, my dog.
What's going on? How you doing, man?
I'm good, man. I'm good, man. Now, you know what I'm saying? Before we get into it, give people a little bit of background about yourself. Let them know who you are.
Well, you know, I'm David Seymour, man. I'm 38 years old, originally from Gulfport, Mississippi. Been in Atlanta now since 2005. HBCU graduate, man, Jackson State University.
Okay.
Got got a son, 14-year-old son, which pretty much takes up all my time. But when I'm not dealing with him, man, I'm into this investing, man. So that's one of my biggest hobbies, one of my biggest interests. What you're doing with spreading information regarding generational wealth, man. I think the more we can learn about this investing, it'll put us in a great position, man, for not only for us, but for our kids and our future, man. So it's definitely good things what you're doing, man. I definitely support 100%.
All right, appreciate it, man. Appreciate it, man. For the people that don't know, man, I've been knowing David since what? I was about five? Yeah. Man. I think we was about 5 years old when we met. Somewhere in there. It's been a long time. So yeah, man. And Mississippi stand up. You already know we got to shout out Mississippi. Mississippi born and raised. So, man, how did you get into trading stocks?
What's crazy, man? I moved to Atlanta in 2005, right after I graduated from Jackson State. And one of the first jobs I got when I moved to Atlanta was for E-Trade, right? I was a customer service rep at E-Trade Financial. And I was only there for 6 months. And I didn't know anything about stocks. I didn't know anything about the market. For those that don't know, E-Trade is one of the biggest brokers out there. Mm-hmm. And I didn't know anything about the market, but I was a customer service rep and I'm taking these calls and everybody's talking about, their portfolio, how's my portfolio? How am I trading? Whatever, just stuff I didn't know anything about. So I only worked there for 6 months because, I didn't pass the license exam the first time. Probably wasn't going to pass the second time. So they were going to get rid of me anyway. So on paper, it seems like it was a bad job, right? But for me, it was probably the best job I ever had because it gave me one of the biggest takeaways. When I left, it's like, man, I got to learn how to trade in stocks because these guys calling up here with $500,000, $1 million portfolio, and something they're doing that I need to learn about. So after I left E-Trade, which is kind of around the time that the financial crisis, was going on, 2008, 2009, or, of that nature, I decided, what, I'm going to try my hand at these stocks, So I think I opened up at that time with a share builder account, which now is Capital One. And I just, gave it a shot. I didn't know what I was doing, but it was something that I felt like I had to learn, you know what I mean? So it took me a few years to get it down pat, to even just know what I'm doing. I'm just buying stuff. And I may not like it one week, I sell it the next week. It was just off and on. I wasn't really seeing no profit around it. But it was just something exciting for me to do. But what was really the game changer for me was, like people say, until you get some skin in the game, right? You're not really in the game. So my next job that I was at for probably 6 or 7 years, and fast forward to 2015, 2016, I took my 401k from that job. Most people usually roll their 401ks over into their new job, but I took my 401k and rolled it over to an IRA, right? Mm-hmm. With that IRA, I bought Amazon, I bought Google, I bought Facebook, I bought Apple, right? Because it was a pretty decent amount of money because I've been working there for about 7 or 8 years. So I've accumulated some money, right? So I bought Facebook, Amazon, Google, Apple, and that was 2016. I still hold those stocks today, but that's what put me in the game. And that's kind of what got my investing career, what pretty much took it off, you know what I mean? So that's when I knew that, you know what, this thing is legit, you know what I mean? It took a couple of years of me bumping my head, learning some things, but when I finally got it down pat with those trades that I made, then I knew it was serious after that. So that's pretty much how I got started.
Okay. That's what's up. So now, do you just deal, strictly with stocks? Do you deal with ETF? Like, do you diversify? Give us a little breakdown of that.
So that's part of what you learn, when you get experience in trading, right, or investing, right? I started off with stocks. Now I've dabbled off into ETFs, right? Now from ETFs, I've grown into dividend stocks. And with dividend stocks, now I've grown into REITs, which are real estate investment trusts. So I kind of stick into that four, I do stocks, I do ETFs, I do dividend stocks and REITs. So, that's kind of where I'm at now. That's kind of how I grow my portfolio out now, whenever I want to buy something. It usually falls. And with stocks, when I say stocks, right, I'm talking mostly growth stocks, right? Usually tech stocks, right? So let me just say tech, ETFs, dividend stocks, and REITs. Pretty much the lane that I stay in right now.
Okay. Now, what was the learning curve? Because I know that's been a big question. What was the learning curve for you as far as to get to your sweet spot of, okay, I think I know what I'm doing now. I can do this.
Well, honestly, I think I'm just now hitting my sweet spot, right? I mentioned the stocks that I bought to kind of get me in the game, but that was, what do I do next, right? So it took me a while to learn. And, when the pandemic hit last year, I was able to get into some stocks, some airline stocks, some cruise stocks, and, some things that was down at the time, right? And, they came back up. I sold those stocks, and that's when I kind of got into my dividend. This past year, basically, I built up my ETFs, I built up my dividend stocks, and I built up my REITs, right? I've already got my tech lined up. So it's, from starting off really in 2009 to 2021, it's been that whole process, just different levels, just learning different things over time. So that's kind of built up where I'm at now. And now I think I'm at a point where probably within the next 4 or 5 years, I may not have to work again, right? So I think I found my sweet spot now, which is going to carry me over for the next 5 to 10 years and on to the future.
That's what's up. And
that learning curve may be different for everybody, right? So I may have to learn on my own. While now with social media, I get a lot of information from social media, from YouTube. Not just listening to everybody, but some people that know what they're talking about. So the learning curve may be different for the next person, right? Like if I'm teaching somebody, I expect that learning curve to be fairly short, a year or maybe 2 years. It all depends on how serious you take it. You know what I mean? So.
Okay. I think it's good to note the long game, man. This isn't an overnight, you know what I'm saying, situation. Some people think that, because people put it out there as, I can show you how to make $1 million in a month, come follow me, you know what I mean? And understand, like, no, this takes time. Unless you got $1 million already, right? It kind of takes time.
Wealth is built on the long term. For anybody who's starting investing, you got to have a mindset that's built for the long term, 5, 10, 15, 20 years down the road. You know what I mean? So, but if you stay consistent on that path, you can cut that time in half. You know what I mean? Like I said, it's all about how serious you want to take it. So, but yeah, think long term when you get into the investing game.
Okay, and this kind of goes into my next question. You kind of touched on it. You said you had a full-time job. So can you have a full-time job and still trade?
Definitely. And I want to, when you say trading, like I consider myself an investor, investing, because, when you say trading, it could be day trading, it could be options trading, and you can do all of those probably with a full-time job. You know what I mean? Is it, those aren't my strong points, day trading, options trading, even though I'm learning options trading, but what I do, investing for the long term, I work full-time, and, I look at my accounts every day. You know what I mean? So, I have a set time when I usually buy into my portfolio, usually bi-weekly or monthly. You know what I mean? So it really doesn't even impact my full-time job.
So. Okay. Now, can you make a profit off this weekly, bi-weekly, monthly, yearly? How does that work?
Yeah. So, I track my accounts daily, right? And I think the key to building and growing your portfolio is not only choosing the right stocks, right? You got to do your research, right? You got to do your research. Make sure you're selecting, strong companies that you want to invest in. And once you do that, once you get in the habit of doing that, then you got a dollar cost average, right? This is the key to growing your portfolio. And what I mean by dollar cost average, you're setting a certain amount of funds, whether it's weekly, whether it's bi-weekly, monthly. I do it around when I get paid, which is bi-weekly. And I usually invest probably 30% of my income into the market, right? So I invest that bi-weekly into stocks that's doing well for me, right? So I look at my returns, and what I call it is rewarding the stocks that's rewarding me. So the stocks that's producing the highest return, or it may be the highest dividend payouts, I'm investing more into those stocks, right? And that grows over time, right? So you're going to see a return in your portfolio if you do it the right way. And honestly, if you choose the right stocks and you invest in long term, there's almost no way that you can be down in your portfolio. You know what I mean? If you look at, we've been in the bull run, which means the stock market has been going up since 2009. Right. So just think, if you've invested just in the S&P since 2009, what your portfolio will look like now. I wish I would have known that then, right? The Dow was in the single digits back in 2009, 9,000. Yep. Now we're 35,000. You know what I mean? So just think, if you had invested in a fund that follows the ETF that follows the S&P or the Dow since 2009, you'd probably be a multi-millionaire by now. You know what I mean? Honestly. You know what I mean? So yeah, it's about being consistent, basically. And I do that by dollar cost averaging, and from there, I'm able to see returns in the account.
Yeah, the S&P, speaking of the S&P, it got me a little nervous. It got me a little scared. So I jumped into the S&P for long term once this big drop happened. What was that, 2 years ago? Year and a half ago? When it dropped down to about 2,200.
Probably last year sometime.
Yeah, last year. It was last year. Last January, February. Dropped down to 2,200. Well, now we at 45. It done more than doubled in like a year and some change. And it got me so nervous. I mean, it is what it is. I'm gonna keep rocking with it and keep going. But you like, whoo, like, are we gonna have a crash, or is this just this real life? But the beautiful thing, of course, about the S&P is that it's based off of, the top company. So if you're not performing, they're going to replace you with another top performing company. So I don't know, but yeah, we in a straight run, and everything has just been taken off as late. So hopefully people are getting in and people are paying attention. But it's never too late, right? It's never too late to get started with this. It's never too late to get started.
Yeah. It's important that you mentioned a crash, right? Because you got to understand what's the difference between a crash and like a pullback, right? So if you invest in long term, you're going to have pullbacks in the market. Like in 2009, it crashed, right? Mm-hmm. That's a crash. Last year it was a big pullback, right? Mm-hmm. We knew that's, pandemic related, right? So that would have been a great time to get in. But know that when you invest for the long term, those pullbacks are going to happen, right? One thing I've heard, time in the market beats time in the market, right?
Mm-hmm.
So if you're in the market long enough, those slight pullbacks, you want to look at those as opportunities to add to your portfolio. You know what I mean? Like, I went crazy trying to buy when the market was down, right?
Mm-hmm.
I know it's going to come back up. I haven't seen it where it hasn't come back up yet in my lifetime. You know what I mean? So, yeah. So if you invest in the long term, because a lot of people, especially new investors, right? They see one pullback in the market and think, oh, investing's not for me. I started investing last week, and I look at my account this week, I'm in the red, and like, no, that's not the mindset to have when you're a long-term investor. You know what I mean? You got to give yourself at least 2 to 3 years, if not more. You know what I mean? Going at it consistently. If you want to see like some real change. You know what I mean? So you got to have that mindset that you're going to be in it for the long term, and you're going to deal with some of those pullbacks.
Okay. So, of course, we know we can't give, quote unquote, stock, tell people what to do in the stock market, but what are some of your favorite stocks that you personally, invest in?
Yeah. So first things first, I'm not a financial advisor, right? Anything I say over here is, informational or educational purposes only, but for me, right, I talked about Amazon, I talked about Facebook, I talked about Google, right? I'm up, 500% on Amazon since I bought it. I'm up 400% on Google, right? I'm up 200% on Apple. You know what I mean? Those will always be my favorite stocks, right? Mm-hmm. If I was giving advice or just saying, hey, what should you start with? Safe stocks to start with. I talked about tech, right? Apple and Microsoft. So you don't even have to think about those. You know what I mean? Those are two long-term plays that, are automatic. You know what I mean? I have Apple, I have Microsoft. My son has Apple, he has Microsoft. You know what I mean? If I was starting a portfolio, those would be two of the stocks that I would start with. If you have a $1,100, $1,200 iPhone, you don't have Apple stock. That's something's wrong with it. Apple stock is less than $150 right now. You know what I mean? They had a stock split last year where they was over 400, but now, and they've been as low as less than $100 in the last year. Now it's trading about 150. I don't see it going anywhere anytime soon. So, Apple and Microsoft are going to be always two of my favorites. Facebook, a couple stocks that I recently added to the portfolio that I'm excited about is Square, NVIDIA, AMD. I'm looking for those to kind of take my portfolio to the next level over the next 5 to 10 years. So, and along with some funds, right? We talked about funds that track the S&P, VOO is something I'm excited about, which is the Vanguard fund that tracks the S&P. VNQ, I like real estate. That's another fund, a Vanguard fund that's centered towards real estate. Here's a tip, right? You don't even have to choose stocks if you don't want to, right? Vanguard itself has funds that follow every sector. You know what I mean? So if you're having a hard time trying to find a single stock, right? Why not invest in a fund that maybe carries all those stocks? You know what I mean? So I talk about tech, Apple, Microsoft, Amazon. Well, realistically, the prices of those are extremely high right now, right? Mm-hmm. May not be suitable for a new investor, right? But VGT, which is a tech fund for Vanguard, may carry all those stocks, right? I have, QQQ follows the NASDAQ, mm-hmm. right? QQQ is probably trading about $300 or $400 right now, maybe too expensive for the average investor. Well, I have QQQM, right, which is equivalent of QQQ at a cheaper price, and it still holds the Apple and the Microsoft and all those type of stocks. So if you can't invest in a individual stock, man, the ETF for the funds, they're the way to go. And Vanguard is one that has all those. So just do some research on Vanguard funds, and that could be your way of getting into the market right there, just by investing in those type of funds from Vanguard. So
okay. So all right, let's switch it up a little bit, because I know people are listening and following, and they like, dang, they talking some good stuff, man. Let's talk about the mindset a little bit. And why do you think it is so hard for people to get started in the stocks?
Two things. One's fear, and two is, just a lack of education. You know what I mean? They don't know. You know what I mean? Scared to try something new. You're scared to try something you don't know. You know what I mean? So, mindset is everything, when you're trying to get to the next level. You know what I mean? Not just stocks, probably anything that you do. But I think people are scared. I think people don't have the knowledge. You got to kind of dedicate some type of time or, something to this process. You know what I mean? So it definitely took for me a mindset change, right? Mm-hmm. And one of the things that I started doing first was paying myself first. I started investing in myself, in my portfolio, before I started doing anything. You know what I mean? So, and I don't think the average person does that. They may, I'm gonna take this money out to save, put in my savings account, or, put it into a Christmas fund, because why? That's what they've been taught to do. To build wealth. That's not the way to go. You know what I mean? Honestly. So you do have to change your mindset. You have to get over that fear of investing. But like I said earlier, they may say, oh man, the market's about to crash. I don't want to invest now. But that's, like I said, time in the market beats time in the market. So you just got to get started, man. You got to change your mindset and get started.
Okay. Hey man, I wish for you youngsters out there, man, especially you that's in your early 20s, no debt, barely got any bills, man. Listen up. I wish I had someone giving me the game like this when I was 21, 22, 23, before I really got my life started. Because yes, I'm doing well, but I would be so further ahead if I had an OG just pull me to the side and say, listen, man, this is the way you need to move. So listen up. So what is the best piece of advice you can offer to someone that wants to start today?
I think find a mentor. You know what I mean? Find a mentor. I'm gonna give you some free game right here, right? So one of my mentors I've never even met, right? But I follow them on YouTube and on the podcast. I'm a heavy podcaster, right? I'm not a big reader, but I'm a podcaster, right? So, this podcast, Earn Your Leisure, and Market Mondays, right? Mm-hmm. Those are two of my favorite podcasts. And I listen to them like diligently, you know what I mean? So not only do I listen to them Monday when they post segments of their Market Mondays, I go back and re-listen to them, you know what I mean? Because I just want to instill that in my mind, you know what I mean? So, and a lot of the things I listen to is stock related, is investing related. So when you change your mindset, that's the type of things that you want to hear about them. You know what I mean? So find a mentor, take it serious, but be patient. You know what I mean? Be patient, because it's gonna take time. Be patient and have some discipline. I don't think that's another thing. I don't think we have enough discipline and patience to see this thing all the way through. But yeah, that's definitely the advice I would want. I would give. And also, when you choose a platform, choose a strong platform, right? A lot of new investors, they run the Robinhood, and I have a Robinhood account as well, but I don't, I rarely use it, right? So,
Yeah.
Stick to your Fidelities, your TD Ameritrades, your Charles Schwab type platform, because they offer so much more, and so much more education as well. So that's the first thing. I personally would advise you to choose Fidelity, right? But like I said, find a mentor. Even my social media is geared around investing now. Like you go to Instagram, oh man, it's so many dividend investing accounts that I follow right on Instagram, right? That's what pops up now. Aristotle Investments on Instagram. He's another good one that I follow. And it's just so much. The information is there. Like when we was in our 20s, not only did we not have anybody to teach us, but I don't think the information was there like it is now, right? It's really not an excuse. You can literally get started investing with $1. You know what I mean?
Yeah.
So there's no excuse not to even start investing in 2021. There's really no excuse.
Hey man, it's true. And I tell people all the time, saving is cool, but if you're trying to build generational wealth, that ain't the way to get it. And I can give you a simple example today, right? In my portfolio, I gained 2% in my entire portfolio. And let me give people an example of what that means. If you have $10,000 in a portfolio, you made $200 in one day. In one day, I don't know what savings account could ever. Hold up. If you had $10,000, it wouldn't even make that in 4 years right now. 4 or 5 years, you wouldn't make that $200. And you able to make that in one day. Got to change your mindset, man. Hey, how can people, go ahead.
Now, I wanted to add on to what you just said, man.
Okay.
First of all, today was a great day in the market, right?
Yes, sir.
Definitely a great day in the market. Also, I mentioned Fidelity, right? Fidelity has an automated trading account, right? Which I also have one of those accounts. It's called a Fidelity.
Yeah, I do too.
You know what I mean? I have, and I don't do it. My Fidelity Go account is up 30% in the last year. I don't do anything but transfer money over, and they automatically invest for me. You know what I mean? So even if you're not able to pick stocks on your own, their methods now, they got so much AI, so much artificial intelligence now that you don't even have to pick the stocks on your own if you don't want to. You know what I mean?
Right.
My automated account is just one of the platforms that I have, just to add on. If it's about making money, I'm all about it. You know what I mean? So that's just one of the avenues that I have in my trading pocket. You know what I mean? So, hey man, it's out there. You just got to go and get it. So.
And then also with those portfolios, just to say if some stocks that they purchased for you are not performing, they'll get rid of them and buy some more. So you don't have to worry about it. But like you said, this artificial intelligence, man, it goes by so many different parameters, man. And, they pick it out for you. In fact, I mean, I have one and it's doing great. So I have both. I have where I do it myself, and I have it where, like you said, I just transfer money over to it and let them do it. And it's been working great for me, personally. So, yeah.
Now, one last note, man. We also should have accounts for our kids too, man.
Oh yeah.
Custodial accounts are very important. So you should have one where you're investing for your kids. Once you learn the game for yourself, now it's time to pass that information on to our kids so they can have it and they can pass it on to their kids. And that's how we start that generational wealth, and that money stays in our families for a long time.
Yes, sir. And that's the name of the game, man. Generational wealth. That's what we building. We starting over, man. We starting to here. There's no more excuses. We're going to get you the information and we're going to go forward. How can people reach out to you? Because some people say, hey, man, I like what you're talking about, man. I want you to give me some game. So, how can people reach you, get in touch with you?
Man, just 2 ways. Definitely follow my YouTube page, man. Stock Talk with David. That's Stock Talk W/David. Go subscribe. leave me some comments, some feedbacks. I like to interact under, you know, so my different videos out there. Also, they have different links to a lot of my other social media. I also have a podcast, Common Sense Conversations with David. You know, it's on Spotify, Apple, you know, anything that really, you know, has podcasts. So just look that up, man. Just, you know, reach out, man. And, you know, I'll answer any questions that you may have. Remember, I'm not a financial advisor, you know. Yeah, I just want to make that clear, but I do love to invest. It's definitely a passion of
mine. All right, good brother. Well,
right.
It was a pleasure. I'm gonna make sure to link all your information to the video so everybody can find you and show you some love.
Sir.
All right, brother.
All right, man. Take it easy.